Welcome to Driving Alpha, where we feature our friends, the outperforming investors who demonstrate their path to driving alpha or outsized investment returns. We're Alpha Partners, where we partner with 1,000 early-stage venture firms as their opportunity capital to invest in their best companies. Driving Alpha is supported by Affinity, provider of the CRM for the private capital relationship economy. Affinity knows who has the best relationship with the right startup. Affinity knows. Learn more at affinity.co/driving alpha.
Welcome to today's episode of Driving Alpha. Driving Alpha was inspired by an exotic car tour where we rented 6 cars, Lambos and Ferraris and Aston Martins and others. We drove around for the day with our VC friends and investors. There were 12 of us, and we each traded cars every 30 minutes or so. And what we found was the best part of that day was our conversations with other VCs like yourself, Dror. Today, we're so excited to welcome Dror Nahumi, a distinguished figure in the venture capital world. As a general partner at Norwest Venture Partners, Dror has been instrumental in shaping the landscape of technology investments, particularly in the enterprise, cloud, and semiconductor sectors, with a career spanning operational, go-to-market, and experiential roles in both the U.S. and Israel. Dror brings a wealth of experience to the table with his recent investments in companies like Gong and VastData that have positioned him at the forefront of emerging technologies. We're so excited to get ready for an insightful conversation with him as we delve into Dror's investment strategies, the lessons he's learned, the future of tech, and some lessons from his career. So welcome, Dror.
Thank you so much, Steve, for having me. I'm looking forward to this podcast.
Excellent. So, Dror, tell me, how did you end up in Menlo Park, California? You're a long way from home.
I am. It's obviously a long story that we have to make short. I was in operations all my life, first as an engineer and in multiple places and so on. One of my latest jobs has been a board member in a company where Norwest Venture Partners was also on the board as an investor, a company called Veraz Networks. And the managing partner at the time, Pramod Haq, sat on the board with me for 6 years in his company. And one day he called me and he said, let's talk about Veraz, but let's also talk about potentially joining Norwest as a VC. And I said, oh, wow, VC, I've never thought about it, but I do have relevant experience. So it took some time from both sides to make sense that this is the next thing, next chapter. For that purpose, I was in New Jersey at the time. So for that purpose, we had to move back to Israel, my wife and I, and we thought a lot about it and decided that this makes sense. And here I am, 16 years later, still doing that as venture capital.
That's awesome. They say that operational entrepreneurs often make the best VCs. Would you agree with that sentiment?
Oh, of course not. With the venture business, it's the most complicated business on earth because we have to know so many things and we all come from different backgrounds. But there's only one way to measure if you're a good partner or not, which is the results. And here I am 16 years later, I'm still doing that. So the results talk themselves, by themselves. I think it depends on the type of investments people make. I think it depends on the personality, on the strategy that each one picks up. It depends on many things. Operational background does help a lot when you try to mentor and help early stage companies when they grow and become large companies. And that's what I'm bringing to the table.
That's great. Certainly helps if you've been there and done that before. But it could also be frustrating too, right?
To some people, you've got to know that you're no longer running your company, these companies. You're not the operator anymore. Somebody else is the CEO. The management team is the management team. Your job as a board member is not to run these companies. You don't need to operate those companies. You just have to provide the right advice to the founding team and the management team that comes after and the board in order to make the best decisions that will bring shareholder value. And not everybody makes that transition very well.
That's great. So tell us more about Norwest. I know the firm's been around for as long as I can remember, but why don't you bring us up to speed to today's time?
Very, very experienced firm. We're now investing from our 17th fund. That tells you how many funds we've been doing over the years. Now we're investing from a $3 billion fund and managing $15.5 billion. So that puts us as a very large venture and growth equity fund with global presence, and that's part of the strategy. So we do to invest in multiple stages, anywhere from seed to growth equity, large checks, and companies who are profitable. We do it in 3 major geographies, which is obviously the US, India, and Israel. And we do it in multiple domains, which are all technology-oriented domains. And
Excellent.
that's how we make ourselves very diverse portfolio with no pre-allocation between the different groups. We just try to look into what makes sense to invest in every given time, where we can create the biggest impact.
And you head up the venture capital unit?
I do. I co-sector head the venture group, and then my personal investments are with Israelis, or whether they're in Israel or in the US.
Oh, that's excellent. I'll be visiting Israel in a couple weeks now. So super excited about that. Top of mind for me then is you've worked extensively with both US and Israeli companies. You're familiar with the different startup ecosystems. How do you see those 2 countries differing? What can they learn from each other?
Fantastic. So 16 years ago, when I started, I tried to build a strategy for Israeli investments at Norwest. At that time, we couldn't find many companies in Israel that went public. At that time, I was saying, prepare to a lot of exits in the 100, 200, $300 million range, because Israel is really good about building technology. What we are not that good at the time was building go-to-market skill set and international management teams and so on. So now, 16 years later, I can tell you that Israel bridged that gap for sure on the go-to-market. Look at companies like Monday and Gong, one of our portfolio companies, VastData, one of our portfolio companies, Workayo, and so on, and as well as many other companies in our ecosystem. Wiz, for that regard, very, very well known. Clearly, the Israeli entrepreneurs learned how to build go-to-market skill set as well. Doesn't make Israel better or worse than the US companies. But it's the same playing field. Now you've got to build great products, and you got to take them to the market in the same efficiency. Doesn't matter where you're coming from.
Has that made your job harder now that Israeli companies are better at going to market, or they just recognize that it's a problem and they need to solve for it?
No, I don't think it made my job more difficult. It actually allowed me to build some true unicorn companies. When I say true, it's like real companies with hundreds of millions of dollars in revenues that are trading at multi-billion dollars. And we invested at the seed stage, and they figured out how to build scale and become significant businesses. And so, on the contrary, it made my life easier with the ability to build big outcomes that move the needle to a firm the size of Norwest.
Excellent. Dror, your personal focus as an investor, is that primarily in early seed incubation? What stage are you most comfortable in? You probably expert in all of them, but just what's your favorite place to focus on?
I've been mostly successful in investments in the seed stage, PowerPoint stage many times, or A sometimes. That's where I found myself creating the most impact, both on the company, because I can influence the early decisions the company is making. And obviously, when you join early, you can create significant equity in those companies. And if those companies become big outcome, it's becoming impactful on the firm. So that's where I selected to focus my time. And those are the best investments I've done so far. And that's where I like to focus on.
What do you
My strategy, by the way, my strategy is not very difficult to understand. I don't know why other people not following the same strategy, and I'm not keeping it a secret, as you can tell right now. But in the seed stage, I like to be excited about two things. And this is when I become bullish about the opportunity. On one side, I like to see that the company wants to build a big outcome. I have to believe in the business and get passionate about the business that the company wants to go after. And that's one on one side. The other side, I want to be convinced that the team has an unfair advantage, that you can't find a much better team globally that can go after this business. If those two things are met, I'm excited to join in the seed stage and join the journey with the entrepreneurs.
So how do you splice that between evaluating? Do you look for great companies, you great founders, both? And the big outcome is, just like, how do you figure that? Is that the founder's perception, the company?
I've seen great founders that go after a feature. So I'm not that interested with that because that usually does not end as a big outcome. And since we're a big firm, as I said, $3 billion size, we're shooting for a much higher outcome. So I need to get convinced that the business opportunity the company goes after is very, very large, that this can really be a multi-billion-dollar company one day, self-contained one day, and so on. And then I want to see that the team, obviously in the seed stage, it's not a complete team. They're missing many, many features, obviously, that they'll have to add over time. But I do need to see that they have some unfair advantage compared to other people that may want to build the same thing.
You want to give me some examples?
For sure. Why don't I give you two examples? When we started Gong, one of our biggest successes as of late, the two founders came to me and I felt like the CEO knew about the idea that he wants to go after, which is what everybody knows as Gong today. And he ran multiple companies from the inside sales side. So he built a lot of inside sales organizations, and he knew the need that Gong serves as better than anybody else. So it's not just about building the app, but building the app for the user. He was the user. So I could see how him and his partner alone can build a product better than other people, which really what happened, after that. Second example, we invested in the seed of two storage companies. One is called VastData, the other one called WEC.io. And in both cases, the entrepreneurs who started those companies have built storage products before, and they knew all about it. So Renan, for example, from VastData, he built exponential as VP R&D. And not only that, after the acquisition by EMC, that product that exponential built became $1 billion a year business. So when he went to build another company in the storage space, he clearly had an unfair advantage. And now it's a $9 billion valuation company that we are very proud of.
Awesome. That's so rewind and play, taking some experience that founder had and an insight that would be hard to replicate. Do you have a lot of founders might not have that prior experience. What other advice might you give an aspiring entrepreneur?
They need to figure out their uniqueness in the market. I'm not saying that an inexperienced founder cannot build a big company. Of course they can. And there are many, many examples for that. What I'm saying is, if you want to win big, you've got to find the partners that know what it takes to go big and add those partners along the way. Sometimes you cannot do it early. You've got to show some capabilities early on and only add the partners. But you should try to always add those people that have the experience that you are lacking of, because that will make you a big company for sure. And adding the right investors also helps because they can show you what are the areas that need to be added as well.
Switching gears a little bit, since a lot of our listeners are fellow VCs, how long have you been in the industry again?
16 years.
16 years. So you've made some mistakes, as have I. Any advice you would give to an aspiring up-and-coming VC?
For sure. I talk with a lot of VCs, obviously our partners in at Norwest, but also a lot of colleagues. People think that we compete a lot, but I think we partner more than we compete. So we look at each other as friends more than competitors, to be honest. And I've seen it's a statistics-oriented business. Not everybody is successful, and we're not always successful, to your point. We make mistakes. That's part of the deal. What I did see is, and that's my advice to everyone, is try to find your X factor. Try to find your unfair advantage. We are a product as well. Our customers are the entrepreneurs, okay? We need to bring the best product for our customers. What makes you unique? If you're like everybody else, but businesses like everybody else, and you don't provide significant value proposition to your companies, why would they choose you? Why would you be able to compete on the most lucrative investments? Not many people have that, and the statistics of VC successful, meaning VCs returning more than 3x in a lifetime, shows that very small amount of VCs that operate in this business provide this kind of success. And part of that, I believe, is that there are too many VCs that do not have uniqueness. And uniqueness can come in multiple ways. It doesn't have to be one way or another, but you've got to be unique in some areas that make you special.
Now, at the risk of making you sound arrogant, what would you say your superpower is?
Yeah, no superpowers. Seriously.
That's the best kind.
Look, I've been in operation all my life. I've seen companies at all scales, from nothing to initial sales to scaling up to hundreds of millions of dollars in sales to going public and whatnot. My superpower, and this is really what I bring to the table, is I tell entrepreneurs, I've done it multiple times. I was able to get companies that started with a PowerPoint and build multi-million dollars, hundreds of millions of dollars in sales and become unicorns and with multi-billion dollar valuations. And more than that, create significant value in their industries. And I can be your partner. I'm not going to be the CEO, but I can be your partner for the journey. And I'll be very involved, not to run those companies, but very involved with the decision makings on the major junctions. And if that works for you, I can bring a lot of experience that can help you, entrepreneur, build a very large outcome. And that's what I bring to the table. And since I was able to do it multiple times now, I think it resonates.
Absolutely. Being a serial entrepreneur and being able to repeatedly get there is super critical in the venture industry. Be able to impart that wisdom, but also as a partner is incredibly valuable, and it certainly comes across. In terms of looking to the future, a lot going on. And you've been observing trends over the last 15 years. It feels like it's hard to believe that we're potentially at another juncture with AI. What do you think the next emerging trends are and emerging technologies that you're most excited about over the next 5 to 10 years?
Yeah, obviously when we sit now, everybody talks about AI. So I cannot talk about something else. I can talk about what I mean, what I think it means. I think there are opportunities, the infrastructure of AI. Obviously, a couple of my companies operate there. I mentioned them, VastData and Weka.io. So there'll be changes in infrastructure that allows those change. Every time there's a change, it provides opportunity for new technology to emerge. And the technologies usually come from startup companies. And that's what we're looking at. But I think Gen AI is getting everybody's mind, capture everybody's mind in terms of what does it mean. I look at that as a new type of user interface. And every time there was a new type of user interface to applications, there was a major shift in the market. New companies emerged, companies you never heard of before, and became major outcomes. So think about CRM, right? CRM was not invented by Salesforce, but the change to web-oriented and SaaS-oriented type of delivery in terms of UI made Salesforce what it is now in a CRM business. Mobile did the same thing. When, application that is mobile first and people did not adjust to that quickly, those companies who came with mobile first offering from a UI point of view became significant outcomes, as opposed to those who tried to adapt what they had built before for the mobile world. So I think that we're going to see an array of new applications and services that are UI first. Obviously, you have to harness LLMs, ChatGPT and whatnot, in order to be a tool that you use to build those applications. But hey, in many applications, it's much easier for the user to text or say what they want to achieve, rather than try to find all the different fields in the SaaS application and how to do that. And that's what I mean by new type of user interface, UI, that LLMs are bringing to the market, and which means many new applications with that, which means much more infrastructure is required to support that, which means new technologies are emerging in order to enable those changes. Okay. So security included, for example.
So you mentioned two companies, and you said of those verticals within the segment, application services and infrastructure. Is that how you think about things, or
that are affected by AI?
By AI, and you like your preferences for infrastructure?
Personally,
yeah,
I invested, since my focus is on Israeli companies.
Yeah,
I invested both in infrastructure and application.
Okay.
So Dror would be an application company as an example.
Got it. Would you like to add any more examples for this? And
there are a bunch of them. On the security side, I'm an investor in a company called Signet Security that is solving secure cybersecurity needs for small enterprises, companies at significant scale. Company called ActiveFence in my portfolio that is helping with trust and safety issues, including LLMs, by the way, to make sure LLMs are not generating wrongful, harmful information. I've got a company called Williot in my portfolio that is helping enterprises with supply chain at scale with amazing technology of monitoring packages, et cetera, et cetera.
Yeah, recently I saw a company that's innovating in the beehive space, which is crazy. And that's probably one of the crazier ideas I've seen in a while. Have you seen anything like in this arena that just made stop and say, you know what, that's just like with crazy ideas. Do you like crazy ideas? Do you not like crazy ideas? I was just on with Tim Draper and he was like, give me the crazier, the better.
Yeah, I don't know if I'll go that far. But I can tell you a statistic that is really interesting. A lot of the major outcomes, including at Norwest, have been companies that we debated a lot early on, that we could not always see how big they could become. And because the issue is that if everyone on the planet see the opportunity, then it's too late for what we see. Going back to advice to other VCs, if you try to follow what everybody see, then you're competing with everybody. But if you try to really understand each opportunity that an entrepreneur comes with and see for yourself, do you believe in that opportunity or not, by doing serious diligence on the opportunity and get convinced that a big company can be made here, then you should make that investment against everybody's wisdom sometimes. Good example, I invested in a company called SolarEdge way back. That was not a seed investment. That was a later stage investment. At the time, all the VCs lost a lot of money on new energy type of investments. But SolarEdge had become a major outcome, and the company went public, and we did very well, and the company kept growing at that point. And that was not that easy to see when we made the investment. But those make the best outcomes.
Interesting. The less obvious to others, potentially, and if you're right, the bigger the outcome.
Correct. Because some other people take them more time to figure out that, hey, there is an opportunity here. Look, even Gong, when we started the company, most investors did not believe in that, in what we're building, right? And when only when we grew, it became significant. So most of the time, we had only one major competitor that got acquired along the way. But by the time we became a significant company, that was a little bit too late for other people to join and do the same thing.
What was the insight that you had that other folks missed?
Okay, that's a great question. So Amit, the founder and CEO, he was, as I said before, super experienced with inside sales and what it takes to build high-scale inside sales. And he saw the need to record and analyze the sales conversations that take place by salespeople, and not only rely on the summary that they put into their CRM. Okay. Now, there have been many questions at the seed stage that everybody asked, but because Amit has so much experience, I said, I've got to really investigate this opportunity. I called 15 customers. 13 out of 15 said, absolutely, we'll use it. We'll use it across the team, not just to onboard new salespeople, but across the team, because we want to learn best practices, and we'll pay about half what we're paying Salesforce. That gave me enough conviction to believe that, hey, we're on something here. It's something that everybody needs. And I think a lot of people that passed on that opportunity in the seed stage simply did not do that work. So there are no such superpowers here. It just worked.
You think you've been lucky?
You've got to have luck with everything you're doing in life.
Well, it sounds like you're working pretty damn hard to make your own luck. So if you're creating some luck by doing some extra work, that's what I've seen. Luck seems to accumulate with people who work hard. With SolarRidge, what was the insight there?
Oh, one of my partners, Matt Howard, looked at many companies in the space, and we couldn't get convinced. So we had some experience and knowledge from other companies we looked at. And when I looked at SolarRidge, that was a late stage investment. So I had to do serious diligence on the company and opportunity, understand the competition and understand the opportunity and some of the promises. The team was absolutely amazing in terms of technology they built. Very high barrier technology in a big market, but a difficult market. No question about that. Hardware and big OpEx, a lot of spending. And it took some time until we built some velocity. But once we did, it was beautiful to watch. And that's the fun part about the business. It's a lot of work. It's a lot of ups and downs. But when you see your companies reaching some amazing milestones, this is very rewarding. This is part of the reasons that I do my job.
Yeah. One of the reasons I do this podcast is I get to talk to some of my favorite people and learn a great deal. I super appreciate you coming on today. Before I leave you, I do have one question. And I think a lot of VCs battle with this, a lot of investors in general. And you touched on it briefly early in the podcast. And that's sort of sometimes the best investments are when your team is split.
Absolutely. I've seen that many times. And therefore, this is one of when I interview new partners to join Norwest, this is one of my selling points, actually. We have a culture at the firm. We don't vote. We don't try to force people to go one way or another. We believe that the partner that is part of our team, once they've done the work and the diligence work, and they pound the table and believe that this is a major outcome, we always let them make the investment. We make them accountable for the outcome as well. Obviously, we have to. But it's a unique thing about our firm, which I'm very proud of. And a lot of my investment that became very successful. Maybe I could not get them done if we had to go through voting or consensus or anything like that. Part of the deal is to let partners do their work and get personal conviction. And if they did the work and have a high conviction about the potential investment, we support them. And it's a big deal.
So that is remarkable. That is really remarkable. Probably share that somewhere in our firm a bit. But do you ever try and convince that partner that maybe they should do a little bit more work? Do they ever turn around and be like, what? I actually did a little bit more work as you suggested and I've pulled back. Does that happen?
Yeah, we don't. It's convince. I don't know if the word convince is the right one, but we do highlight the areas that we as investors would hesitate about when it comes to a specific opportunity. And we would also highlight the areas that we think that maybe the partner did not do enough diligence and offer help that we can provide as a team to complete our diligence. And we want to see conviction. If we want to see that people really believe in the opportunity, and if they hesitate, obviously every investment has its own risks, but people have to have high conviction to make an investment and be very passionate about the companies they want to join.
Awesome. Dror Nahumi, thank you so much.
Thank you very much, Steve.
Enjoyed it. And maybe we'll see you in Israel sometime.
Looking forward to it. Thank you.
Thanks.
Thanks for listening to the Driving Alpha podcast, where we host top investors to demonstrate how they outperform the market. Click subscribe so you don't miss future episodes. Driving Alpha is supported by Affinity, provider of the CRM for the private capital relationship economy. Affinity knows who has the best relationship with the right startup. Affinity knows. Learn more at affinity.co/driving alpha.